Hello. Right, so the next payments frontier. So before we get into it, I'm a product manager with Contis, and for those of you who haven't had a chance to stop by our stand yet, we're a payments technology provider. So we very much look at digital assets through the lens of payments. So that's kind of what I want to talk about today. As any committed historian will tell you, before you try to understand the future, it's helpful to understand where we've come from, have a bit of a look back at the past. So that's what I want to talk about initially. We will get on to the future of payments. So recently we've seen a very rapid evolution of the medium of exchange. So for 2,500 years roughly, we had physical currency. Now that was in many cases precious metals, coins, but in some cases shells, beads, anything that could be used as a counter, anything that could be exchanged that's of value. Then about 1,000 years ago, there was a big evolution. We got promissory notes. And this was really significant because this was the first time that we had a currency that was actually not the thing of value, but a representative version. It was a representative of that thing of value, just a piece of paper that was essentially an IOU. Then fast forward, in the last 50 years, this is where the evolution really kind of took off. So we started to see the rise of digital fiat currency. Now, in the early days, that was credit cards. That was a piece of plastic that you could use that essentially just moved numbers around in databases. Then, within the last 20 years, of course, we got digital assets, and then a little more recently, we started to get stablecoins as well. And that is really significant because that went back to the original physical currency. Now, I know that digital assets are, of course, not physical, but they are the thing of value in and of themselves. So before the promissory notes, if you own a Bitcoin, you own a Bitcoin. That is the actual thing of value. Now we're also starting to see CBDCs as well. Lots and lots of countries looking at CBDCs. Not so many actually got them off the ground. There are still a number of questions around what CBDCs will actually look like. So I'm not going to dwell too much on those just because there's still a lot of unknowns there. So this is a standard maturity curve, the maturity stages of any new innovation. Obviously, you start with introduction, then you get growth, it peaks at maturity, and then down into decline. So physical currency is very much in decline. Will it be completely over? Do we expect to see an end of physical currency? No, probably not. But roughly 12% of all transactions now are done in physical currency. That's global. So that's really small. That's not a big proportion of the overall global payments. Now, digital fiat, I would argue it's in maturity, but still at the very early stages. So the left-hand side of that curve there. There is still room for growth in digital fiat, and I'll come on to that in a moment. Crypto assets and stablecoins, very much in growth phase. I think we'd all agree. I think that's part of the reason we're all here. Huge opportunity, lots more to do in this space. And then, of course, CBDCs are very much at the introductory stage. So, as I said, still lots of activity in digital fiat. I'm not going to spend too much time on this, but I think the most interesting stat on that page, 2/3 of adults worldwide now make or receive a digital payment. Now, as you can see, high-income economies, that proportion is significantly higher. We're talking 88% of adults now who transact digitally, compared with developing economies where it's a bit lower. You're looking at about 1/3 of the population. But there is still room to grow because there are still some issues. There are still some areas that can be improved. So banking tech is pretty old. Legacy banking tech is 40 plus years old. So there's definitely room for improvement in terms of the technology underpinning. Geo restrictions, Digital fiat is not borderless. There are difficulties in moving money between countries. Slow, costly, high fees as well. So certainly in Europe, if you look at SEPA, you're talking about €1 per transaction in some cases. And of course, in a lot of cases as well, it's based on office hours. You know, it's 9 to 5, Monday to Friday. So definitely still room to improve, but we're nearing the peak. We're nearing the point at which we start to move into decline. Obviously, cryptocurrencies, digital assets, very much in growth. I know we're maybe not in the best climate right now, but certainly if you look back to last year, crypto use, or the number of crypto users, increased 178%. I mean, that's massive. That is a huge increase in the number of people using cryptocurrencies. I mean, the graph here, you can see this is the market cap of cryptocurrencies in orange. So you've got Bitcoin, ETH, USDT, compared to some of the big economies' currency in circulation. So still a long, long way to go. If you look at United States dollar compared to Bitcoin, there's still a lot of opportunity for growth there. So crypto for peer-to-peer payments. We have seen a lot of improvements recently. There are a number of apps and platforms out there that do make peer-to-peer payments a bit easier, a bit better, but arguably it's still an inferior user experience to traditional payments methods. It's not always intuitive. There are often quite a lot of complications involved. I do recognize that there have been a number of improvements, and there are some pretty cool apps out there that make this a lot easier. But from a mainstream adoption point of view, that is certainly one of the barriers to more broader adoption. Another issue with peer-to-peer payments with crypto is volatility. We're all familiar with the Bitcoin pizza. If crypto is appreciating, do you really want to spend it on a cup of coffee? That could end up being a very expensive cup of coffee. And there's still a lack of widespread acceptance. So we talk about the plumber test. If your boiler breaks down and you have to call out a plumber, emergency call out, can you pay your plumber in Bitcoin or ETH? You might be lucky, you might find one who accepts it, but in most cases the answer is probably no. Until we get to a point where you can depend on any tradesman you call out taking crypto, I would say that we're not quite there. There is still room for growth, there's still room for improvement here. I mean, there are some case studies, some examples here, but by and large, crypto is not used as much as a peer-to-peer payment method as it could be. So one answer to this has been crypto cards. Now, most major exchanges will they offer a crypto card. I mean, it's technically still fiat transactions. Most of these cards, the crypto is being liquidated in the background and the actual transaction takes place in fiat. But from a user perspective, it feels like you're spending your crypto. Obviously, in terms of user experience, it's just the same as using your normal debit card. Widely accepted with card schemes like Visa and MasterCard supporting these cards. Obviously, you can spend it pretty much anywhere. But volatility is still a problem. Do you want to spend your Bitcoin if it's going to be worth more in a few years' time? So that does hold it back. Arguably, stablecoins do go some way to answering that, and I will come on to that. So stablecoins, obviously, it works in exactly the same way as a Bitcoin or Ether peer-to-peer payment, but you have the advantage of not having to worry about volatility. Now, there may be some exchange rate movement. If you're in the UK transacting with USDC, for instance, there is still some exchange rate risk there, but the volatility is massively reduced compared to transacting in Bitcoin, Ether, any of the other big cryptos. Another major advantage is instant settlement 24/7. You send someone some stable coins, they've got them instantly, that's it. They don't have to wait for them to clear, they don't have to wait for them to settle. So really big advantage, a massive move forward. Still not legal tender, though. Can you pay your taxes in stablecoins? No. I think in some jurisdictions, I think the Swiss have started looking at it, but in most cases, no, you can't pay your taxes in stablecoins. CBDCs, as I say, still a lot of unknowns about CBDCs. Potentially 24/7, definitely legal tender. Will they be cheap to use? Probably, but we don't really know yet. The expectation is that they will be very cheap, but we haven't actually seen that many working properly, so who knows? So that gets on to the next frontier then. So we talked previously about the evolution in the means of exchange, the actual medium of exchange. The next big evolution, we believe, will not be in the medium of exchange, but it will be in the universe in which payments take place. So the Metaverse clearly offers unique opportunities for payment providers, for innovative payment providers. We believe the critical success factors will be user experience, optionality. The Metaverse is not one single thing. The Metaverse consists of many different realms, if you will, and each of those may opt for different payment methods. And of course, if you've got optionality, then you need interoperability. Interesting stat here. Bloomberg Analysis estimated that by 2024, there will be $800 billion worth of opportunity in Metaverse-related transactions. And also by 2026, it's estimated that 30% of all businesses will have a presence within the Metaverse. So huge opportunity, as I say. So what will payments in the Metaverse look like? Well, I'd say the answer to that is it depends. As I say, there are many different, or will be many different realms within the Metaverse. It's not one single uniform thing. So if you look at it in terms of Web 2 principles or Web 3 principles, a Web 2 principle Metaverse, something like Meta is building, what would the payment methods look like there? Probably very similar to what we've got now. PayPal's, Visa, MasterCard, your Apple Pays, your Android Pays. So external, as in not native to that particular Metaverse, and intermediated. There's still middlemen. If you've got a Web 3 principle Metaverse, then still likely to have external payment methods, but peer-to-peer, decentralized. So Bitcoin, Ether, USDC. Now, number 3 is what I find really interesting, because I think there's still quite a lot of questions to be answered here. We're starting to see parts of it now. So an internal payment method that's native to specific Metaverse realms. So we're seeing this in gaming. Fortnite, Roblox, they have internal native means of payments. You've got V-Bucks, Robux. They're still centralized, though. They're still managed, the ledger is still managed by the game operators. What about an internal native Metaverse means of exchange that's decentralized? Could that use something like the same mechanism of Bitcoin? Could we have a proof of work type currency within Metaverse realms, or proof of stake? I think that's really where interesting things will happen. I think there's still more questions than answers, but that's where we're looking now. That's where we see the next big opportunity. And that's it. Thank you very much.